Hello, my name's David Miller. I'm the manager of Nexus Global Solutions portfolio and the co-manager of Dynamic. I'm speaking to you in early October in this extraordinary year of change, which hasn't finished yet. Well, September was a quieter month. The enthusiasm of recovery was tempered and markets drifted a bit lower. Solutions was down 0.3% during that period and Dynamic down by 1.1%. Hardly surprising that there was a bit of profit taking after the strong recovery since March. So in terms of asset allocation, no real changes to the portfolios. Dynamic remains fully invested with only about 2% in cash and the rest in global equities. Solutions is about 55% in global equities, 30% in fixed interest and cash, and the balance in alternatives. Last month was very much a matter of equities rather than any particular movement elsewhere. And there was plenty of rotation between sectors. Looking at the good performers, different ones than previous months. US technology took a breather, whereas some of the UK domestic companies like DS Smith, JD Sports, and the global manufacturer, Renishaw, performed well. In Europe, Adidas, Kering did well. So it was a range of things that added value in the last month. And I think the diversified structure of both portfolios lends itself to this sort of market where rotation and volatility are continuing. In terms of the background, the good news is that the economic numbers are better than expected, but I think a lot of that was discounted by markets. Governments and central banks remain highly supportive. I think interest rates are going to stay low to negligible to negative for years to come. So I think one has to actually make investment decisions in order to earn a return, and that's what we're doing. It's all about active management, paying attention to the detail, a fair dose of patience, and keeping a close eye on liquidity of markets, the individual companies we invest in, quality, balance sheet strength, and the ability to pay dividends. So as we enter the last few months, it's about politics, whether it's the US presidential election or Brexit, but underlying all of that, it's about economics, it's about business, it's about what we all do as consumers and employers. I think that both portfolios are in good positions to benefit, but we are and remain cautious in our approach. I hope this has been useful for you. I look forward to reporting again in a month's time.